So the big question is this: how do investors like us who don't have a PhD in finance or millions to start investing, how do we grow our bank accounts to build real savings and retirements and yet still have the time to do what we really love? That is the question, and this podcast will give you the answer. Hey guys, John here. Welcome to the Stock Market This podcast. Super excited to talk to you today about different seasons of investing. And what kind of prompted me to talk about this is I'm walking over to this place, this set. It's this morning to get some awesome courses. The seminars recorded. It's gonna be the coolest thing ever. And it's super freaking cold outside. And a week ago it was probably 80. And so I don't know. Maybe it's cold because it's really early in the morning. I don't know. Excuse me. But seasons change, right? And so you've got every single year there are transitions, right, between summer, fall, winter, spring. And as the seasons change, people change accordingly, right? And so they'll change from wearing shorts and a t-shirt to maybe a jacket, and then moving into sweater weather. And it just kind of depends, right? And so very clearly and obviously, as the seasons change, your actions and the way you dress and the way that you be what you do, you change your behavior, right? And so what's interesting is it's true, it makes everybody's of course, right? It makes total and complete sense for the weather seasons, and it's probably the reason why I shouldn't really have flip-flops on, but I hurt my foot, so you know what, I need some open-toe shoes today. So anyway, I want to kind of move this perspective into asset markets, right? Because in markets, a little bit ago, there was an inverted yield curve, right? And inverted yield curves have preceded, literally every recession, ever, by 1 or 2 years, usually, and about 10 to 15% in the S&P, usually. And so, as I said, this idea of bull markets, right, where everything's going up versus bear markets when everything's taking a poop, right? And for end-to-noon trading, it's not a huge deal because everything's on a day-to-day basis, and it's all based on pre-market gainers and then intraday gainers, and so it doesn't really matter as much. But for swing trading and long-term investing, it significantly affects the way that you want to manage your investments, right? And especially portfolio weighting and balancing as you're approaching savings and retirement goals, and kind of more specifically, the way that you prepare yourself, because eventually, right, stuff corrects, markets move, and so that's why people don't just buy stocks and hold them for their entire lives. Yes, you can do that with some companies, you can do that with some investments, you can do really well, but if that happened, prices would never change and they would only go up, right? And so this idea that price is determined by supply and demand and buying and selling, because of that, right, you're gonna have people that sell. And so what's interesting is how behavior has to change from different seasons. It's kind of, I think, most applicable in swing trading because long-term investing, it's, long-term time horizon, whatever, right? But with swing trading, it's cool because I remember probably it was last October, and it was right before the Fed exploded all the rate hikes, probably about a year ago, and everyone was once that happened, everyone was freaking out, and it was weird because everything had been so green and so bullish up to that point, and so basically 90% of my investments were long positions, and they were doing inverted yield curves, none of this crap, no one was freaking out, and so because of that, everything was doing really hype, right? But then what happened is over the course of 2 months, October, November, and then I guess it kind of finalized and culminated in December, everything just kind of blew up, right? And it's normal, right? You have ups, you have downs, and you're totally used to that. But then all of this overarching economic news came out, everyone was freaking out, and then within I guess another half year, there was an inverted yield curve. And so it's this idea that the entire macroeconomic global economy, at least the US economy, has sort of shifted seasons, right? So it used to be in summer and it was this very bright and prosperous huge bull run, and now it's sort of transitioning into a fall, right? And soon enough it'll be into a winter, and it's totally cool, right? Like you can make money in both markets, right? Which is the insane power of like shorting stocks, right? And this idea that like you make money when the stock goes down, which is like the coolest thing ever, right? And so what's cool is like, as this 2 or 3 month time period of contention and a lot of pressure shifted and then kind of culminated in the inverted yield curve, like a lot of my swing positions have shifted, right? So instead of being all long, now I'm shifting into maybe like half my positions being short, and they've done like really, really, really well. Why? Well, it's because I noticed that the seasons were changing and decided to put some long pants and a coat on and get my gloves. It's just this very, very simple mindset shift that you can have like total and complete control over, everything that you do, right? Like your investing mindset, your investing attitude, all aspects of your day and the way that you manage your assets. Like it comes down to one person, and that one person is you. And so you got to make sure, like when you get up and you're thinking about the investments you're going to make, and specifically like the medium term ones, how many like shorts versus pants, right? Like long versus short. And a lot of it's based on technical analysis and technical setups. But still, these swing trades, they're still pretty influenced by the market. And so you have to sort of realize, like, is everything in a general uptrend or a general downtrend? Are we in a point of contention? Are we about to get screwed? We're about to have the best year ever, because nobody really is 100% on it. But you can use like sort of these overarching indicators like the inverted yield curve and, also just kind of looking at the market to figure out, okay, well, it's been super hype. Everything's going straight up. So I guess we're in summer, right? And when you're in summer, it's like the best time ever, right? You just make a ton of long investments. And then when you're in winter, it's also the best time ever because you just make a bunch of shorter investments. You can make a lot more money in a down market than you can in a bull market because people freak out. And usually bear markets, they last a lot shorter than bull markets. And you see like crashes like in 2000 and 08 and so many historically, right? Really cool, like big deck, right? Like this idea that there are so many of these huge crashes in very short periods of time, forecasted by inverted yield curves. And in those time periods, you see people that like become billionaires and make tons and tons of money because they short, right? And what's cool is like normally it would take maybe 5 years or 10 years to have the results that you can get in a very compressed period of time with shorting during a quick market crash. So if the market races, a decade of gains in just a couple of years, you can bet your butt there's some stocks that have gone from $100 to like $1. And if you short that crap, you're gonna make a ton of money. And you can make a lot more money because it's really tough to find a stock that goes from like $1 to $100 in the span of a year or two. But with crashes, like that crap happens a lot. And so when you short, it's easy to make a lot of money really quickly, or it's simple, like whatever. It's not like easy. You gotta like put in the time, put in the effort, and find the stuff that works. But all you have to do is sort of change your perspective and understand that like seasons are changing, and as seasons change, your investing attitude, your mentalities can change with it. And as soon as that happens, like everything changes, right? Because you're on top of the game. And it's like, it's really interesting, but like so many people don't understand this. It's like living in the North Pole and like half the people around you are in like swim trunks with no shirt on because they think it's going to be the best time ever. And that's why like a lot of investors that don't invest in like their education or listen to stuff like this where they're like growing and continuing to sharpen their skills and their mindset, and instead they're just like playing it by ear, they get like screwed, right? And people get messed up super hard in crashes because they're just like those guys in swim trunks in the North Pole and they're not paying attention, or they just have no freaking clue. So that's why it's like so important to always stay sharp and always know what's going on, because like you'll still survive, right? Either way, and you'll still do really well either way because the market is so powerful, and in the long term it always like recovers. But like imagine like if you could just kind of like double your performance, triple your performance. Like why the freak not? Like how cool would that be? And like it's just this idea and this mentality that you absolutely deserve to crush it. And like the best way to have that happen is to just stay on top of it and understand when the seasons are changing. And when the seasons are changing, just change your mentalities, change your principles, change your investments just a little bit. It's all the same basics, it's all the same foundation. A head and shoulders setup is like basically the same as an inverted head and shoulder setup. It's just a question of, is it going up or is it going down, or vice versa. And as soon as you master that, you can have so much success, so much impact. It's especially useful in down markets, because like shorting is so powerful, because usually stuff moves down really quick, especially with swing trades, and you can make a ton of money doing it. So go out there, guys, apply this, crush it. Make sure you like understand what season you're investing in, and then when you do, it's not like 100% short positions or 100% long positions. It's like 60-40, 80-20. It's just the setups that you see working. For me, like, I increased my percentage of short positions a whole lot, just because I found a lot of really good ones, and it works really well. And obviously you don't want to be like totally against everything, and you have to have stop losses, and you have to have stuff based in technical analysis, but you can do really well if all you do, it's this idea of like you're trying to figure out, and I'll finish with this because it's like ridiculously parallel to this. I have this one lunch lady. She's the nicest person ever. I love her so much. And we scream each other hi every day, hug each other, say each other's names. Like, it's just the nicest little relationships we have. And I see her every morning at breakfast and at lunch, and it's just so nice. And she wants to start a snow cone business, and she wants to start selling snow cones. And she's going to like the city, and she's trying to get her vendor's license, and she wants to get access to sell all of these snow cones. And she wants to get she wants to invest like all of her savings into a snow cone cart, or get investors to invest into her snow cone cart and do it as like a nonprofit. It's just the nicest thing ever. She's super sweet. But right now it's like freezing cold outside. So do you think it's a good time to sell snow cones? Now, sure, right? Like, you can still have profits. You can still sell a couple of snow cones, but it's going to be like 100 times better to sell them when it's blazing hot and in the middle of summer, right? And so it's just this idea that you need to do your stuff in the right time. Instead of selling snow cones in the winter, maybe sell hand warmers, right? Like, you just have to take a step back, spend like 10 freaking seconds thinking about what's going on here, and then make your investments accordingly with a strong backing in technical analysis. So really cool stuff, guys. So we got a ton of value from this and sort of understand some of the overarching macroeconomic perspectives. Some stuff I really wish I knew a long time ago. And it would have helped me, especially going through that initial transition a couple of years ago from like one of the longest bull runs in history, which is just so freaking sick, and it is amazing, to like an inverted yield curve, and now we'll see what happens. So with that said, thank you guys so much. Have the best day ever. I will see you in the next one, and peace out. Woo! Want more stock market secrets? If so, go get your free copy of my best-selling book, 9 to Noon. You can get your free copy plus $11,176 of unannounced bonuses it took me years to uncover, completely for free at 9tanoonsecrets.com. Inside 9 to Noon, you'll find the top 38 secrets you can use to double your portfolio every 2 years and make upwards of 10% per trade daily.